Hello, my name is Josh, and these are some quick thoughts. These are my quick thoughts today. I'll be going over Peloton. And just so you know the format of this is just going to be me talking about my thoughts about a company and the stock. It's going to be about 10 minutes, and yeah, I hope you enjoy. So today we're going to go over Peloton. So some background first. So Peloton is a fitness company. They create connected fitness devices. So those are treadmills, and bikes. That's what they do right now. Typically, they start in the bike one, and they also sell a subscription to a video service where they stream live classes. And that's kind of what separates them from most other fitness companies. The company went public about 2.5 years ago, and they saw a massive increase in their share price during COVID, based on more people, gyms were closed, and more people had to work out at home. And so that's kind of what laid the groundwork for today. So let's go into a bit about Peloton, the workout industry, and how I see this business, and whether I think it's a good business or not. So full disclosure, I am a shareholder in Peloton. I own a little bit of shares, actually a decent amount. I think it's 3% of my portfolio, and I'm a big believer in it long term, but let me tell you why. So as mentioned, Peloton grew enormously during the COVID shutdown. I personally am a big fan of working out. I love it. I like to sweat. I run, I bike. I used to go to the gym a lot when I lived in a condo. We had a very beautiful gym, so I'd try to work out there, and it really hurt and sucked when those were shut down due to COVID. So I can very much relate. And just to go over my framework again, whenever I'm looking at a business or a company, I look at it from three factors. So one, I look at the product. Is it a product I like? Is it a product I understand? Is it a product where I see the value? So that's number one. So do I understand this space? Yes, I'm a big workout fan. I'm not the biggest musclehead, but I've had gym memberships for years. I've worked out. I used to do much more, but during COVID, I stopped so much, and I started running and biking. But do I understand that space? Yes. There's also a luxury gym item that I understand a little less, but my wife does go to F45. That's a fitness class. They're expensive, but I understand a bit about why people like going there, and again, product. Peloton has fanatics, people who like their Pelotons, love their Pelotons, similar to Tesla. People are Tesla fanboys, Apple, people are fanatical about that. There's really that brand. So I understand the product, and I know that other people love the product. So that's a huge, good, positive sign. So step one, understand the product and the value. It's clearly delivering exceptional value, as otherwise they wouldn't have such amazing, fanatical riders and owners of these products. So step two, what's the second lens I look through? It's kind of the macro environment that it exists in. Like, why is this business growing now, and what is going to propel it in the future? So a big part, as mentioned, was COVID. With gym shut down, people decided to work out at home. I think that is only going to continue, as well as kind of the curated live stream events. I do think people will go back to gyms. Don't get me wrong. It's not like everything's going to go fully home, but I think even after COVID has changed people's perceptions and what to expect from a gym membership. It's one, and two, I also think it's just changed our habits. I think more and more people are going to say, you know what, yeah, I want to work out at home. I have a busy life. I work from home, whatever it is, and I just want to get on for 15, 20 minutes here and there. Also, their brand has significantly risen in the last little bit. So because of that, I think that you're going to see even more. It's going to really help them sell even more product. So I definitely see the macro environment of people working out more at home. And the last one that I look at from this is, right now, almost all gym equipment is dumb gym equipment. I don't know if you remember with phones, we went from dumb phones to smartphones. Now almost every phone sold is a smartphone. When I look at the next 10, 15 years, do you think there's going to be more the percentage of gym equipment that's smart right now, is it going to be higher or lower? I think it's only going to get bigger, and I think we're going to see a huge growth in that. Is that all going to be Peloton? No, there's already competitors, but I think almost all gym equipment moving forwards and in the future, in the next 10, 15 years, it's going to be smart gym equipment. I think Peloton is the leader in that, especially in the luxury side of it. So I think they're going to be a huge beneficiary of that trend. I could see, like right now, it's just, screen and connects, but I could see it connecting to your Apple Watch. I think that's already the case with some, and it tracks your heart rate, but it could even make recommendations for music and other things. I could see a lot of things there. But yeah, I think that we're going to see only more connected fitness devices. I think that's a trend that's going to continue. And right now, they started just in bikes, and they got into treadmills. I think there's other areas to go into, mats, rowing equipment, bench press. There could be other equipment that's connected that Peloton could use. So I definitely see there's a large market for them to address, and I see a lot of tailwinds at their back to propel this business forward. So the last view is business model and valuation. So that's a bit about how does this company make money, and can it be structurally profitable in the future, and is it something that I want to buy today? So the way that they make money, they sell connected products, devices, which they produce in-house now. They bought a company to produce their gym equipment. And then they also, as mentioned, sell a monthly subscription to their video classes. So the side that excites me is the video classes and subscription. There have been, I'll call them fad hardware device makers before, and they've died out. Fitbit was a hot stock at one point because it had the brand name and everyone loved the devices, and then it was easy to be copied. Apple Watch came in at the high end, and at the low end there were Asian knockoffs. So I think that's a pretty hard area to compete in, just hardware. And that's really not the sexy part. The really sexy part about this business is the subscription. People are paying $40 a month for this subscription, which is a significant premium over other subscription services like Netflix, which are $10 a month, maybe 15. But this is a lot more. But it still compares favorably when you think about it versus a gym. $40 a month is not that much when you're comparing it to the price of a gym. So if you're getting a great workout, which people love it, it's a fair price to pay. But that's really the part that I find interesting. And the way I look at it is the devices themselves, they did drop the price of the hardware, so the bikes and treadmills. But in the future, when I look at it, those had like 20% gross margins, and the gross margins on the software, the subscription side is huge, 80% over. As long as the hardware can cover all of the expenses, so the sales, marketing, and research and development, which I think they will be able to. I think all the profits from the bikes will be able to cover all of their expenses. Then really the way I look at it is the subscription is basically 100% margin. Obviously it's not, but I'm shifting the expense from the software onto the hardware. So that's really a loss leader. The point is not to make money on the bikes. The bikes are just to get into people's homes, and then you can sell them a $40 subscription, which is, again, that's where the real money is. Those are high margin things. They recur every month. So again, 40 times 12 per year again, and they have extremely high retention rate. Over 90% of people stay with them for the full year, per year. So you're talking a very lucrative business. So really they have to get the number of users subscribed up significantly, which is why recently they dropped the price of their bikes. That actually dropped the stock a lot. A lot of people said that was negative for demand. I see it as the opposite. I see it as them saying, hey, we got to get this into as many people's homes as possible, and then we can really start collecting the money on the subscription, which again, is where all the profit is. So right now they have 2.4 million subscribers. I think it's about 1.7 on connected devices. They also have a lower tier one that's just digital only, so you don't have a device, you just have like an iPad, and I think that's $13 a month, and they have about 750,000 of those ish. They added about 1 million subscribers last year. Again, it was COVID, so maybe that's a little high, but let's say they add 750,000 per year, which I think is very reasonable. In fact, the stock shot up today about 4% because they said there's higher demand than expected. And again, I only see this market continuing to grow. I did a little bit of a back of the napkin calculation, assuming $40 a month times 12, I'm assuming a 25 PE. PE is price to earnings, and I assumed 100% margin on the subscription. Again, I'm assuming all costs are going to be covered by the device. You could say that's wrong. You can quibble with my assumptions. Maybe say it's 80% margin, whatever it might be. You can quibble with it, but this is how I see it. I said, how many users do they need at $40 a month in order to double the market cap, assuming a 25 PE? Basically, they need to get to 5 million users. Again, they're already at 2.4. So again, there are little things you can quibble with. It's not truly $40 a month because some of the users are at a lower price tier. It actually ends up right now being about $35 per user because most of the users are on the higher tier, but some are on the lower tier. But again, about 5 million users is what they need to get to, and they're already halfway there. And they're looking at between 1 million and 250,000 users per year. You're talking, not that much longer. You're talking 3 to 4 years before they double. That's a pretty good investment in my book. Again, these are back of the envelope math, but I believe in 3 things about this company. 1, they're the leader. They have a strong brand. There's room for them to grow into other equipment. It's a huge market. Equipment's a huge market, and they have secular tailwinds. So again, great product that people love. Tailwinds behind them. It's only a growing market. Connected fitness has only become bigger and bigger. And 3, it's fairly valued and has a profitable business model. So to me, I'm a huge fan of Peloton, the company and the stock. I'm a shareholder. I've been buying in the mid 80s. Again, it shot up today to 91. It was up 4%. I'm still probably a buyer at this price. And I'd like to see this hit about 4 to 5% of my portfolio in the long run. So yeah, those are my quick thoughts on Peloton. My name is Josh Lipton, and thanks for listening.